If you're following a pattern-based system, then all I need to know is what you know and top it. Spikes are not your brokers. Spikes are good opportunities. Even though we know the big boys are always going to be right, we don't want the absolute strongest one because that's too dangerous. Yeah, so today we're going to be doing mastering trade selection. We're going to go straight into it. What I'm going to do here today is I'm going to help you how I personally filter out trades, how I teach my students in the elite community how to do it, and most importantly, how I'm going to be teaching you guys at Urban Forex now on how to pick trades as well. Let's get started. All right, let's open up some pairs. And before we do that, let's step into the currency strength. So before I begin, I always go in with the currency strength. Okay, so what we do, we first start with the strength meter. Okay, this is how I start my day. And I'm gonna, you don't really need the strength meter, but it's just what we do in-house proprietary at Forex Watchers. Okay, so what I personally do, I like to start with the strength meter and I pick up all the major pairs. So for example, what major pairs do you see here when I put my mouse right here at the edge? Okay, what flares up? Okay, what numbers do you guys see? We got USD at 6, we got Euro at -4, we got Yen at -6, Aussie it's at -1, so Aussie doesn't matter, New Zealand at 1 doesn't matter, CAD at 4, CAD has some importance. So let's pop into both US dollar and Japanese yen. So let's go straight into it. Okay, let's open up the dollar group first. So Euro USD, downside. Okay, Pound USD, down, short. Aussie USD, short. Okay, New Zealand USD, direction, down. USD CAD, now here, everywhere we've had USD is on the right side. Okay, it's always on the right side. But now in USD CAD, we got it on the left side. So the chart is flipped upside down. Okay, which direction USD CAD? Up. So it means the same thing. Here, once again, USD is on the left side. That means the chart is going to be flipped. Say, again, that's up. Now, we got a bunch of pairs here from Euro USD all the way to USD Yen here saying that US dollar is strong. Here's a question for you guys. Now, if everyone is strong, now we can open up all 6 pairs in the same direction, but is that actually going to be useful to us? No, it's not going to be too useful to us. Now, how about this? When you look at situations like this, now notice on the 15th of, or between the 15th, you see the 15th here and the 19th here? Look right above that. You see that lowest point there? If I drag my mouse straight across from it, would we say price is currently trying to break that area? Yeah? Okay, let's do the same here on Pound USD. If we look at that similar area and we say this spot right there, if I drag my mouse across, are we trying to break it or have we already broken it? Already broken. Okay, so what does that tell you in terms of Pound USD and Euro USD? Which one is stronger? Okay, Pound USD. Pound USD is going to be stronger. And we're talking about for US dollar strength, sorry. So Pound USD is a better pair to be on for the strength. Okay, let's take it even further. We take that same location, which is going to be around here, and price is right here right now. It's like, whoa, that thing is really far down. Okay, let's take that same area here, and here's the current price on New Zealand USD. Like, okay, that's already been broken as well. The same area here on USD CAD, and we look at it, it's like, okay, it's just starting to break, and we do the same thing in this area in USD Yen, and then we drag it across and we say, that one's not even reached there yet. Okay, now, which one is the strongest? Which one says US dollar is the strongest? Okay, for those of you who are saying New Zealand USD or Aussie USD, you guys are correct. Let me ask you this question, which one is the weakest? Okay, so the answer to that is going to be either Euro USD or USD Yen, because they're just barely getting to that area. Okay, this one is just trying to break it right now. Everyone else is long gone past that date. Long gone. They're making new lower lows and everything. But these are the only ones who are haltering behind. Now, let me ask you this. How many of you guys, when you guys are watching a sports team and stuff like that, and if you had to bet on a sports team, how often do you bet on a losing team or a losing horse or a player that's horrible? Never, right? So when you think in that direction, You get an idea to go with the winning team. Now, it's not the same as in trading. The winning team is always going to be better because the winning team are the larger players. Now, the larger players, they control the market, they control which direction the industry goes, they control everything. And let me tell you one thing that they do not like. They do not like losing. Always remember that. When it comes to money, the strongest always survives and wins hands down 99% of the time. Always. Okay? So keep that in mind. Having that said, we know that, okay, how do we normally trade? So when we're looking at movements like this, when the trend is down, for us to pick up a trade, we need a pullback, right? Now, let me teach you guys something here. I'm going to show you guys something really quick.
Now, are you curious about the exact strategy Navin has been using to approach the markets? The Mastering Price Action course reveals all of that. In that course, you're going to understand the logic behind each price action movement. And from that, you will be able to take your trading to the next level by having a much more solid understanding of the markets. And because you're a subscriber, just click on the link in the description below to access our exclusive discount. Time to take your trading to the next level. All right, let's get back to the video.
All right, I'm going to help you guys unlock this idea of which direction is the market going. Okay, so watch very carefully. Here the market is heading up. Okay. What's the market doing? Retracing. Okay, so it's retracing. It's struggling, right? Okay. Now, based on this pullback, how much of a pullback is it based on the movement? 30%, 40%? Okay. Now, I'm going to do another one. Here's a movement up. Here's a pullback. What kind of pullback is that one? Okay. 75%, 80%. Okay. Now, the question is, we got trade number 1 and we got trade number 2. What does a deep pullback mean? So keeping that in mind, if it's losing strength and losing power, that means if we're buyers, our opponent, the seller, is actually quite strong as well. Correct? Now, can I ask you guys this question? What's a range? In terms of power, what's a range? Okay, consolidation, equal power, and everything. Now, when you look at range, when anyone looks at a range, what people do when they look at a range is their eye glances on this spot, okay? Okay, that's what they see when they see a range. But what they miss out on is a range is actually a story from a bigger picture. So if the market's going up and then it ranges, now tell me the strength of this buyer. How much pullback is coming in? These are all pullbacks. These are all pullbacks. Only difference is every time there's a pullback, the buyer snaps it right back up. The buyer snaps it right back up. So while people are looking at this as, I don't know which way the markets are going, there is a bigger story to it of, hey, it's a range for a reason. The buyers are extremely strong. Now, okay, the reason there's a purpose I'm showing you all this. So just hang in there with me. Here we go. So here's situation A, okay? Situation number 1, markets are going up and we're having a nice pullback. Situation number 2, markets are going up and the markets start to range. Situation number 3, this is the same currency group, okay? They're all doing the same thing. They're in the pullback mode. Here's situation number 3, markets are going up and then we have pullbacks. Okay, what can you tell me about the 3 different scenarios? Which one's the strongest? Okay, the absolute strongest one is situation number 3. It has the abilities to make a higher high. Situation number 2, there's a battle. Situation number 1, the sellers are temporarily dominating. Okay, now having that said, when we see retracement, deep retracement, shallow retracement with no lower low on each try, and then we see barely a retracement but an upward retracement kind of thing where there is sellers moving in, but then as the sellers move in, the buyers snap it a little bit higher, a little bit higher, a little bit higher. What's actually going to happen is you notice situation number 3 shines and sticks out. Okay, now that situation number 3 shines and sticks out, let's take a look further now. We're not pattern traders. That's the thing. You know what's a pattern? I'm going to show you a pattern. This number right here, this is a pattern. If you have a pattern, you end up in this number because a pattern can be breached. That's a pattern. Okay? If you're following a pattern-based system, then all I need to know is what you know and top it. Make sense? Okay, so let's keep moving. Let's go into... All right, now when looking at this scenario here, we got New Zealand USD, we got Aussie USD, the crazy ones, right? Now let's move this into an area where for us to get a trade, where can we trade it from? Okay, so we got a bunch of trades. Now for us to take a trade, we need safety. Okay, so now that we understand strength, right? Okay, we understand strength and we understand how we can actually judge the charts based on strength. If we understand that scenario, the next thing to understand is if the markets are constantly going higher and higher and higher and higher, understand this one concept is who buys up here? Yeah, late buyers, right? Retail traders, just people who are just learning. So these are the people who are buying really late, okay? And this happens to be in everything, in every walk of life. They hear about an opportunity, but it's already too late, and they buy and they get crucified. Okay, moving forward from this information, keeping that in mind, if the markets are like this, and then that scenario number 3 that we talked about is starting to do this, even though it's strong and we buy up here, is that safe? Okay, now that's the one thing to always remember. No matter what the education or which direction you go, risk is the number one most important thing. Not chasing profit, it's risk. If you can control risk, you'll make more money than you can imagine. Okay, so then we have the second scenario with this pullback here, and then we have scenario number 1, which was I think the second scenario was a shallow pullback, sorry about that, and then scenario number 1 was the one that had a deeper pullback. Okay, so which one is safer? Now this is an important question because many people tend to get this wrong. Is it the one that's the extreme hard one? Is it the one to go with number 1 that's pulling in too deep? Or is it the one that's showing sustainability where it's like it's holding? Yeah, the answer would be number 2, because the number 1 is losing momentum. If it's losing momentum and you rejoin that momentum, you might get a trade that goes high up to there and fail again. Here, you might get a spike down initially, but then it'll rise up a little bit healthier. But that initial spike will go down. Now, that's the sad part of it. Okay, so because a good opportunity will have spikes, always remember this. Spikes are not your brokers. Spikes are good opportunities. How many of you guys have realized that over the years you've been trading now? That every time you get spiked out, you get stopped out, and then the trade goes in your favor. How many of you guys have been through that experience, right? It's not a broker situation. It's not broker led. It's actually a situation that tells you you're on the right pair, just you're on the pair and the wrong time. You just have to be on it slightly after. We're gonna focus on how do we pick trades based on this knowledge now, okay? Let me open up the yen group, for example. So, USD Japanese yen. The recent resistance we've had is around this area, early December, right? Here's early December. And based on this recent resistance, we've finally broken higher, correct? We had a similar resistance in December here. We've broken higher. The markets are pulling back, but based on that resistance, are we still going north? Yeah, but keep that in mind. Same thing in early December. Pound yen, same resistance. Same thing on euro yen, just below it, same resistance. Same thing on New Zealand yen, similar resistance. Okay, and finally Aussie yen, the same or similar resistance here as well. Okay, now when you notice this information where all the charts are doing very similar activities, they're going in the same direction, they're respecting similar support resistance zones around the same time, this tells you one thing and one thing only. Yeah, this tells you yen is weak across the charts, and it also tells you the world is interested in dumping the Japanese yen. What's the reason? Not our concern, but the world is interested. Now, who's the world? When I say the world, it's not every Tom, Dick, and Harry. This is people with extreme cash flows. Banks, hedge funds, big boys, yeah, countries, billionaires. These are the guys who are like, I don't like yen, get rid of it. This is going across the board. So it's telling you to get rid of all this. Now, just because it's very high up in the sky right now, can we sell it? Okay, so understand this one concept. If the big boy says, dump Japanese yen, get rid of it, and you're saying, this looks like it's going to be a sell soon. According to my A, B, and C wave pattern and my Fibonacci numbers and all this other scenario, I'm getting a sell signal. Now you compare that sell signal to what the big boy is telling you in front of your face. He's saying dump the Japanese yen. And you're saying, no, but my sell signal. As a professional trader for the last 10 days, my sell signal must be stronger. It's not gonna happen, right? I'm trying to make you guys realize, stop stepping on the toes of the big boys. They're gonna get angry. They're just gonna rob you like blind. So you gotta be very careful with this. And I'm trying to teach you how to look at what the big boys are trying to tell you. Okay, now that we understand yen has the money flow, our job now is, I know I wanna dump yen, but I also know the whole world is also watching yen. Because look at this. Now here's the thing. If I show you a chart and I do this, Would everyone say this is an uptrend? Would everyone say these support resistance are nice buy areas? Right? Very straightforward, very simple, right? Okay, so this is how the world views the market. Very straightforward, very simple. Reality is, this is not how they trade. You know how people trade? This looks like a buy. I think I should buy it. 10 minutes later, news comes out. It is a buy. Enter. Make sense? You see what happens? It's all run by emotions. It's run purely based on emotions. And if you do that based on emotions, and if you think now the chart now, if you think of the big boys as on a chart, and the big boys are showing you dump Japanese yen, and the chart looks like this, what you're looking for is, I can't enter it up here because I know the world is trying to buy this. And once the world tries to enter on this constantly at every step of the way that you try to hit a buy at a high price, you're increasing your odds of getting smacked really, really hard, even though you're in the right direction. Now you're like, wait a minute, Navin, you just told me to go with the big boys, but you're telling me not to go with the big boys. What are you saying? So there's a little confusion here, right? So it's like, okay, what are you saying? Get a better price. Now you come in like a smart investor saying, give me a deal and I'll come with you. I'm not going to just follow you because you got the big cash in your wallet. Let's play ball. Does that make sense? What you're doing now is saying, I agree with you, but if you want to do business with me, give me a better price. What does a better price mean? Lower the price a bit. Lower the price a bit. Give me a pullback, and then as the pullback is coming in, I'll consider it. If the price is decent enough, I'll take it. But what the big boys will do, they're going to do this. Prices come down, then they go up again, then they come down a little bit more, then they go up again, and then a little bit more, and they're like this, and everyone's like, perfect. I will take that price now because it looks like it's preparing to go back long. They're going to smack it down very hard, creating an illusion. It's like, this is the moment when this 3 letters come to reality. What the F? What is going on? Okay, once this happens, immediately the person who was buying gets stopped out. The person who was thinking of buying says, screw this, I'm selling. They start selling. The person who was buying also says, I'm stopped out. It's a sell everything. Okay, once all this selling happens, they spike it right back up. And at that moment, would everyone agree that this spike, we start blaming everything, right? Okay, whether you want to call it a fake out or anything, it's not a fake out, it's strategy and it's brilliant. All right, so let's take a look at those same charts, and now it comes down to, now that we understand the strongest one, even though we know the big boys are always going to be right, we don't want the absolute strongest one because that's too dangerous. We want a one that's a little bit of a pullback, but once we get a little bit of a pullback, be sure to learn how to do one thing, how to time it. And timing is one thing the average person cannot do. You know why? Because the average person is looking to make a quick buck as fast as possible, which means zero patience. So, taking a look at that. Now, all right, let me show you on the charts here. This pullback that came in, he was looking at this very, very sharply. If we know this is buyer's territory, if we know the big boy is saying dump Japanese yen, when this pullback comes in, how do we read the momentum? So, market's coming down, pulls back, market's coming down again, pulls back, market's coming down again, and then it gets devoured here. Now, here's the thing. In this area where the sellers get finally devoured after several tries, what happens? Would we say the seller is dead? Okay, so there's a final push running, right? Okay, good. So it's not done yet. As most people start buying, it's gonna do the next pullback here. And as it does the next pullback, one thing I want to point out to you guys, would we say it's a good price to buy right there? Is that a good price to buy? The idea comes to is prepare for buys here, right? Now, let me show you something very, very critical here. What most people do is once they see this, once the seller dies and this big green candle starts showing up, their eyes glisten up with joy and hope and saying, oh my God, is this the moment? Am I gonna make money? Deer in the headlights, exactly. That's what it is. Like, yes, it's my time. All right, so let's take a quick look at this. So this one says, after several tries, the seller died. Prepare for buys, right? Can everyone tell me, what does this one say? What about this one? What about this one? What about this one? How about this one? Is anyone else saying it's ready to buy? No. No one else is ready to buy yet, which means if they're gonna do another push down further, this guy will spike. Why does it spike? Here's a question. Here's the main important thing. Why should it spike? There's two major reasons why a spike should happen. Why? Here's the thing. If anyone, any Tom, Dick, and Harry who's buying right now, where's their stop loss? Recent low. Why is it a recent low? This is the common education revolving around the industry. Yeah, it's a 95% education, right? It's a recent low. This is where they put all their stop losses. Let's take them out first. Instead of you putting your stop loss there, be the guy that takes them out. Be that person that says, you know what? I'm going to think like a big boy. I'm going to wait till they're all crucified. And I'm going to say, you know what? Take me with you, big boy. I'm coming along. Okay? Yeah, so let the spike happen. Once the spike comes back, you're like, okay, spike is back. Is it preparing for a long? What about the rest? 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 Bingo. Now, if you have to be a buyer, now here comes a trade picking question. If you have to be a buyer, which one is the best currency pair to buy? Which one looks the healthiest for an uptrend? USD yen. Perfect. It is the best one to buy. However, you use the other currency pairs to time it like precision. You time it to such a precision that you will not go wrong and you won't be part of that spike. Okay, why is it the best one? Look at the curvature of pound yen going north. Look at the curvature of CAD yen going north. Look at the curvature of Aussie yen. It's actually going downwards. The curvature New Zealand yen going downwards. The euro yen going upwards, but lots of chop. But USD yen is just nice and smooth and it's aiming for the heavens. Make sense? That's how you come to a complete conclusion of how do we select it. Thank you so much for coming. I love you guys. Cheers. Bye for now.